Let's have a session on Edexcel Paper 2. This is for GCSE Business. So we're going to go through 8 big topics, and that's based on the advanced information. The link for the advanced information is in the description box below. Know it well. Topic number 1, stock management or inventory management. So remember, when we think about stock management, it's just in time and buffer stock or just in case. So the benefits of just in time: you hold limited stock, so you have lower storage costs. Products won't perish or become obsolete because you're only holding the bare minimum because it's arriving just in time. Now remember, just in time is a type of lean production, so it has a focus on efficiency. But you might go for a buffer stock approach, being you hold much more, you hold a larger quantity of stock. Why you do that is because if you're holding a large quantity of stock, it suggests you bought in bulk, so you would get purchasing economies of scale, and that means lower average cost per unit, and that's going to be good for you in terms of adding value. Next thing, can meet sudden demand changes because you hold lots of stock. If there's fluctuating demand and it fluctuates and it increases very quickly, of course you can meet that demand change. Now also, it might not be just be demand changes, it could be supply changes, and the fact that because of Brexit, boats stuck in Suez Canal, and of course coronavirus has meant supply issues and supply chains has been a problem in the last few years. So by having a just in case approach, a buffer stock approach, you can meet those sudden supply changes for the worse, of course. Last thing to think about is with buffer stock, there's less reliance on suppliers, so there's less supplier risk, as there would be with just in time. More details on that with the cards up there. Number 2, importance of motivation. So why is it important to motivate your workforce? Important if it's chains of analysis type question. So improve productivity, lower absenteeism, improve staff retention, reduce recruitment costs, and of course, improved quality. Number 3, motivation methods. Remember, if you're trying to motivate your staff, we just saw the benefits of motivating your staff just a minute ago, there's financial methods and there's non-financial methods. Non-financial could be job rotation, job enrichment, autonomy. And on the financial side, increased remuneration, be it salary or wage, bonus, offer commission on sales, promotion, and of course, fringe benefits. Topic number 4, ratio analysis. And when you're thinking about ratio analysis, that's gross profit margin and net profit margin. Gross profit margin, expressed as a percentage, is gross profit divided by revenue times by 100, because it's expressed as a percentage. And if you need to calculate the gross profit, remember gross profit is different to gross profit margin. Gross profit is revenue minus cost of sales. And that information is going to be found on the income statement. Net profit margin. So net profit margin is net profit divided by revenue times by 100. And if you need to calculate net profit, remember net profit is different to net profit margin. Net profit is gross profit minus expenses. Now, of course, that information can also be found on the income statement. The next thing to think about is benefits of ratio analysis. So it's useful to compare to previous years, useful to compare to rivals, and it's useful for stakeholders such as potential or existing shareholders. Number 5, centralized and decentralized structures. So a centralized structure is when control and therefore decision making is made by the highest layers of management. Whether a decentralized structure is when control and therefore decision making is delegated by the highest layers of management. But they still have responsibility, but they delegate the decision making process. Benefits of centralized approach: quicker decision making, consistent decision making, that might be appropriate for the business. Decentralized benefits might motivate junior and middle managers, and they're empowered, of course, through that delegation, and it could be useful for internal recruitment. Number 6, the design mix. When designing a product, a business must consider its design mix, and there's 3 bits to it. AFC, Arsenal Football Club. So aesthetics, the business will need to consider how the product appeals to the senses of the consumer, the senses of the customer, such as the appearance of the product. Function, the product must do the job it has been sold to do. It must do it. And cost, the economics, the business will need to consider the cost production per unit. How much does it cost to make the product? And compare this to the expected price it intends to sell that product for. Maybe it could do some market research to work that out. Design mix, of course, that's in the research and development phase of the product life cycle. The product life cycle. So the phases of the product life cycle: research development before the release, and then the release, the introduction, and then you'll have the growth stage, the maturity stage, and of course the decline stage. Remember, in the decline stage, sales are not zero, they are declining. And also you have extension strategy. If you're in the maturity phase, extend your time in the maturity phase. If you're in the decline phase, you're trying to get back into the maturity phase. Remember extension strategies. Extension strategies are a method for a business to increase sales in a saturated market. They are mostly commonly used in the maturity or decline stage of the product life cycle. Examples of extension strategies: target a new segment, reduce the price, add new features to the product, update packaging, advertise more, enter new markets. That could be new regions. And the last thing to say is thank you for your support this year. This is the end. This is the final sesh. Goodbye.